In 12 months, SanDisk went from a $38 stock to $1,590 at today's close. A 41-bagger. For 1,063% in one calendar year. This is one of the most extreme earnings re-ratings in the history of semiconductors. Today we break down what happened, why, and whether the move can continue. Research, not financial advice. Before the thesis, the math. Here is SanDisk's share price moving over the last 12 months, quarter by quarter. Watch the shape of this move. It is not a straight line. The first 3 months barely move, and then a NAND supercycle turns on. For snapshots, 1 per quarter. Months 1 through 3. SanDisk starts at $38 right after the Western Digital spinoff. By August it is $47. A $9 move. Respectable, but nobody is paying attention yet. The company has lost money for 3 straight fiscal years. Almost everyone treats it like a legacy commodity NAND business with a structural problem. Months 4 through 6. Spot NAND flash pricing starts ripping. Hyperscalers begin building out the storage tier of their artificial intelligence training clusters. SanDisk goes from $47 to $200. 424% in 6 months, and the earnings have not even printed yet. The market is front-running the cycle turn. Months 7 through 9. FQ3 fiscal 2026 prints, and it is the confirmation print. Gross margin steps from 30% to 51%. EPS turns positive at $5.15. The market re-rates the whole company on that one quarter, $632 by end of February. 1,556% in 9 months. Then the last 3 months. FQ4 fiscal 2026 lands. Revenue prints $5.95 billion, almost double the prior quarter. Gross margin hits 78%. EPS prints $23.03 in 1 quarter. The stock more than doubles again, finishing at $1,590. 41 times the May 2025 starting price. Why did NAND turn so violently? The answer is one fact about artificial intelligence infrastructure. Every training cluster needs fast, dense, persistent storage to hold model weights, checkpoints, and training data. The amount of storage per accelerator went up by an order of magnitude. NAND demand exploded, supply was already constrained. A modern artificial intelligence training cluster checkpoint can be hundreds of terabytes. Multiply by tens of thousands of GPU nodes, multiple parallel runs, model versioning. The storage bill of materials for an artificial intelligence build-out is now dominated by high-density NAND solid-state drives. That is the demand vector that did not exist at this scale 18 months ago. Now the supply side. Through 2023 and 2024, the NAND industry, SanDisk, Micron, Samsung, SK Hynix, and Kioxia, cut wafer starts aggressively to stop bleeding cash. Capacity additions stalled. When artificial intelligence demand showed up in early 2026, there was no idle capacity to absorb it. Spot pricing went vertical. By the FQ4 print, contract NAND average selling prices had reset materially higher across the industry. SanDisk happens to be a pure play on this. No diversification into DRAM or other product lines to dilute the cycle exposure. When the cycle ripped, SanDisk got the cleanest leverage to it. Here is the irony of the spinoff. Western Digital spun off SanDisk into a standalone NAND-only entity in early 2025, and analysts initially called the structure a liability because it left SanDisk fully exposed to NAND cycle risk. When the cycle turned, that same exposure became the most valuable feature of the stock. Now, the financial numbers that actually drove the move. Price action without earnings is speculation. Price action with earnings is a re-rating. Here are the actual numbers from SanDisk's last 4 quarters. The single most dramatic 4-quarter sequence I have ever seen on a semiconductor income statement. Start with revenue. FQ1 fiscal 2026 printed $1.9 billion. 3 quarters later, FQ4 printed $5.95 billion. Almost a tripling in 9 months. That alone, without any margin or earnings detail, would justify a major re-rating. But the leverage on this revenue is where the story gets extreme. Now, look at gross margin. FQ1 fiscal 2026 printed 26%. FQ4 prints 78%, 3 times higher in 9 months. That is what a memory supercycle looks like. Every additional dollar of revenue at constrained supply pricing drops almost straight to gross profit. And here's the punchline. FQ1 fiscal 2026 lost 16 cents per share. FQ4 printed $23.03 per share. In 1 quarter. The annualized run rate off that single quarter is over $90 of EPS, which is why the stock cleared $1,500 and the forward price to earnings sits at just 9. Stepping back to full year, FY 2025 lost $11.32 per share. FY 2026 earned $28.77, a $40 swing in EPS in a single year. If you can find another non-distressed semiconductor name that has done this in modern market history, I would love to see it. The most important question for anyone buying SanDisk anywhere near these levels. NAND is a cyclical commodity. Every boom ends. Every bust ends. The real question is how much runway is left in this particular upcycle before the inevitable mean reversion shows up in the contract prices. On demand, the constructive case is straightforward. Hyperscaler capital spending guidance for calendar 2026 and 2027 calls for continued aggressive artificial intelligence infrastructure build. Storage as a percent of that capex has been rising every quarter. Demand visibility is the best the NAND industry has seen in over a decade. On supply, the constructive case is even stronger. The industry burned itself so badly in the 2023 through 24 trough that capacity additions are still well below historical replacement levels. New wafer fab capacity takes 18 to 24 months from announcement to volume. There is essentially no near-term supply response. On near-term visibility, the most important fact in the FQ4 print was that SanDisk's largest hyperscaler contracts repriced at the new spot levels and locked in through fiscal 2027. That removes near-term ASP risk on roughly half the book of business. Earnings power for the next 4 to 6 quarters is now structurally higher than the market was assuming 6 months ago. But every NAND cycle has turned eventually. The current upcycle is the strongest in over a decade. Mean reversion on ASPs, on margins, on volume, is the single largest risk holding this name. The next 12 months look locked in. The 12 months after that depend on how the artificial intelligence capex cycle itself ages. To close, bull case and bear case side by side, then where Wall Street consensus actually sits. Research so you can form your own view, not financial advice. SanDisk is a high-volatility cyclical name with a structural moat in pure-play exposure. Your risk tolerance has to clear both the cyclical risk and the valuation. Bull case point 1. At $1,590 on a forward price to earnings of 9, the market is actually not pricing in continued earnings power. If the FY 2027 number even comes close to the FQ4 run rate, the stock is cheap on forward earnings, despite the 41-bagger move. Bull case point 2. There is no other pure-play, US-listed NAND name with this kind of leverage to the artificial intelligence storage build. Micron has DRAM diversification. Samsung is too large a conglomerate. SK Hynix has its own diversification. SanDisk is the cleanest expression of the NAND ASP cycle in public markets. Bear case point 1. NAND is the most cyclical category in semiconductors. The current cycle is the strongest anyone in the industry has seen. Mean reversion is mathematically certain. The only question is timing. If hyperscaler artificial intelligence capex resets even modestly, SanDisk's earnings could have inside 2 quarters and a 9 PE goes to 30 overnight. Bear case point 2. At 78% gross margins, every competitor in the NAND industry is incentivized to add capacity as fast as possible. 18 to 24 months from now, new wafer fabs will start hitting volume. When supply catches up, the contract pricing renegotiations will turn ugly for incumbents. And here is where Wall Street consensus actually sits. 22 analysts cover SanDisk. The mean price target is $1,493, essentially in line with where the stock trades today at $1,590. The range runs from $1,000 on the low end to $2,350 on the high. The bulls and bears do not agree on whether the cycle has another double in it, or whether the easy money has already been made. That is the full SanDisk thesis. Not financial advice, the research, the numbers, the catalysts, the risks. Hit subscribe and the notification bell so you never miss a market-moving breakdown. Thanks for watching US Market News 24.